Hello, trading has closed on the 19th of September 2023. We'll always start with our disclaimer, go over our calls, and make some predictions. It's my trading plan for tomorrow, September 20, 2023. Remember that I can be wrong. Trade at your own risk. Also, tomorrow and Thursday I have a lot of personal business. I doubt I'll be doing much trading, if any. I won't be able to watch the market all day for sure. And anyone risking money on my call should realize I'm very busy this time and don't have as much time as I normally have to analyze things. So that was the pattern with the early high, which is this, and tomorrow should also have the early high. We said the pattern typically has an early high and a late low, but lately the late low often has been higher than the early high. Well, it wasn't higher than the early high, but it certainly wasn't an all-day drop, which is what this pattern normally does. And when it isn't an all-day drop, when this high, when this low is so strong, typically it leads to higher prices. But the catch is there's a lower MEJT target, 44.2512. Unless we gap up smartly, the rules say that's going to print. The FOMC announcement comes out tomorrow. Typically leads to wild swings. Wouldn't surprise me if we traded higher and lower, but I will freely admit that I don't trade ahead of the FOMC announcement. It's just too unpredictable for me. During the day, MEJT gave an ultimate buy signal. The minimum target printed immediately. There was also an optional lower target. The optional lower target certainly printed, but almost always we get more than the minimum when there's an ultimate buy, and we got more than the minimum. System now says this rally is not for keeps. We're going to trade 44.2512, and if we don't gap up, the rules call for that to print tomorrow. This is Tom DeMark's sequential indicator. We finished bar 12 today. Bar 13 gives a buy signal, and bar 13 can finish early. So technically, any trade under 44.4211 is bar 13, giving a buy. Now again, I'm going to stress, his signals have been much more accurate for lows than they have been for highs. But it just identifies the area of a low in his work, not the exact day or the exact price. And it means you're overextended on the downside. When you're overextended, you can work out of it by correcting with price in a strong rally. You can correct with time by consolidating. You can correct by printing 9 bars more of a setup like this, or you can fail altogether, and when these things fail, they fail big. So you can't just see bar 13 and go long, but you should be aware that that's an area his work says you're very likely to have a pause in the decline, and if there is a rally when bar 13 is so high or the low of the pattern, it tends to be a good rally. So if we start a good rally, I would believe it if bar 13 prints. We haven't looked at this chart for about a month. We tried to come up with some price targets up here. We had wave balances in the 4180s. I don't think we're going there, as I say, just because one number works, it doesn't mean some other number won't. And we showed this trend line, and we stopped right at that trend line. So when you drop to a trend line, a big trend line, and a straight line move, either you gap under the line or the line wins. So if we don't gap under this low, under this line tomorrow, if we do trade under it, I don't think it'll stick. So we have, assuming we get more of a drop tomorrow, which isn't a gimme, we have sentiment indicators at an extreme, which normally occurs close to a low. We have what should be bar 13, or easily could be bar 13 of a demarked buy signal, and we have support, which if it's not broken by gapping under it is likely to hold at least any breakthrough. It should be recovered. So in spite of all the negativity out there, I don't think it's a slam dunk that we're going a lot lower. Doesn't mean it can't happen. But this is an area where shorts, I think, should be careful, particularly when the close was over this last low. We had a pretty big tank here, undercut all these lows, and instead of piling on, we recovered over this low, which is pretty tough to do. We have to use the mixed signals rules. The commonest thing tomorrow is a gap and prompt move outside the day's range. And you can read the rest. It's a pattern with the early high. It doesn't tell us where we open, just that there should be an early high. Signals are mixed. It's bullish. Today's normally bullish pattern closed so far from its low and closed over a prior low. That's bullish stuff, but it's bearish. We have a lower target. The FOMC report tomorrow typically leads to wild swings. I can't predict them with a sufficient degree of accuracy. I don't try. Sentiment indicators are compatible with a significant low, and a demarked sequential buy signal is likely to print tomorrow. I'd still like to see a lower price before this decline ends. I can make the sentiment work. I can make the time work. I'm having trouble making the price work. But nonetheless, if we start a strong recovery, I can explain it. So it should be a wild day after the FOMC announcement. We're in an area based on trendline support and demarked signals where there could be a low of some consequence. But it's not a gimme, and we're going to have to see what happens after the FOMC announcement. We could have a significant low tomorrow if we trade low enough and then reverse. And once again, I had wave balance. I had wave balance at a couple of places. One's in the 4390s, and one's in the, here's 4390s, and one's in the 4360s. If we do get a big drop there and then bounce back, then we have everything in alignment. We'd have sentiment, price, and time in alignment, but those are still pretty far away. And just because it would make a nice picture, that doesn't mean it has to print. But if it prints, my antenna will be up. It's a pattern with the early high, wild action at OM after FOMC, and that's today's call.